So this one here is going to be about T accounts. And T accounts are accounts that are shown in what is called the company's general ledger. And a company's general ledger shows, it pretty much stores all of the accounts and the balances that are associated with each account. And the T account pretty much summarizes the balances that are in each account. So based on the activities that occur, so all of the transactions that you can see here on the screen, all 8 transactions, pretty much you have to determine what's the overall balance that's sitting in the cash account, what's the overall balance that's sitting in the equipment account, the owner capital account, the rent expense account, office supplies, etc. What's the overall balance after processing these 8 transactions? So the T accounts do just that. It actually summarizes what the balance is in each account. So here's how I like to do it. I like to tackle it this way because there's several ways that you can prepare the T accounts and prepare it properly. What I like to do is take it by transaction or set up the T accounts by transactions. So I like to start off with transaction 1. Go ahead and prepare the T accounts for each of these accounts you see here, cash, equipment, and owner capital, and then go ahead and put in the amounts, whether it's on the left side or the right side of the T accounts. And then I like to move forward to transaction 2 and do the same thing. That's how I like to do. You can also do it by account name. So if you want to start off with cash and get all of the debits and credits that occurred in the cash account, you can do just that. Either way, you're going to come up with the same, I want to say the same answers. All right. So let me do it my way. Transaction 1, that's what I'm going to start off with. So transaction 1, we start off with cash. Cash has a debit of 20,000. So I'm going to draw the cash T account. It literally is a T. All right. And so just a bit about the T here, what to do with this. So on the left side of the T account, that's the debit side. On the right side, that's the credit side. Okay, so this 20,000 is going to go on the left side of the T account. So equipment, I'm going to put equipment over here. It's going to also have its own T account. Okay, equipment's going to have has a debit of 30,000. I'm going to put that 30,000 on the left side of the T account. So this right here just lets you know that cash and equipment, those are 2 separate accounts. So you're accounting for all of the amounts that occurred in cash separate from all of the amounts that occurred in equipment. Hopefully that makes sense. Okay, then we got owner capital. Yeah, I'll throw owner capital down here. Okay. Owner capital has a credit of 50,000. That 50,000 is going to go on the right side of its T account. Okay, we're done with transaction 1. Now I'm going to move to transaction 2. So again, this is how I like to do it. So transaction 2, we got rent expense for 2,000. That's a debit. So I'm going to bring down here rent expense. Okay, it has a debit of 2,000. I'm going to put 2,000 on the left side. Cash has a credit of 2,000, so I'm gonna go back up here to the T account for cash. Put that 2,000 on the right side. We're done with transaction 2. Transaction 3, office supplies has a $500 debit balance. Go ahead and create this T account for office supplies. It's going to be a debit of 500. Okay, cash has a credit of 500. Go back to cash T account, put that 500 right below that 2,000 there, indeed, on the right side, that credit column. Excuse me. Transaction number 4. We got a $50,000 debit balance for cash. So 50,000 is going to go on the left side of the T account. Then service revenue, there's a credit of 50,000, so I'm going to put service revenue down here. And it's going to be $50,000 on the right side of the T account. Okay, we're done with transaction 4. Transaction 5, salaries expense of $2,000. That's a debit. So create a T account for salaries expense. I think I need to restart my computer. It's kind of doing some weird things right now. Okay, so 2,000, that's a debit. Okay, cash of credit of 2,000, that's going to go on the right side of cash. All right. So that's transaction 5. Now we're moving on to transaction 6. So moving pretty quickly through this. So cash, $60,000, that's a debit for transaction 6. The 60,000 goes there. Service revenue, 60,000, that's on the right side, that's credited. So 60,000 is going to go to service revenue. Okay, we're done with transaction 6. Now we're going to move on to transaction 7. Utilities expense has a debit of $300. So I'm going to create the T account for utilities expense. That's for $300. Go back to transaction 7. We see a credit of $300 for cash. Okay, cash got $300. So notice there's a lot of activity going on in cash, and that's because from the beginning, I wanted to keep it simple to just use all transactions that affects cash because it's easy to, understand how this works. Okay, that was transaction 7. So transaction 8, last one. Owner withdrawals of $1,000, that's debited. So I'm gonna put owner withdrawals up here. Yes, and that's going to be a debit of $1,000. And then we go back down here to transaction 8. We have a credit of $1,000 in cash. Okay, and that's going to go up there. Awesome. So we're done. We pretty much included every single amount, and I want to say, yeah, we included every single transaction into the T accounts for each account. Okay, so we took everything that occurred in these transactions and we just pretty much just inserted them into the T accounts for each account. So this pretty much shows us the summary, the summary that occurred in each account given these 8 transactions. So before I get to cash, I'm going to just start off with the easy ones because some of them only have one amount that was debited or credited into their accounts, to its accounts. So equipment has a $30,000 debit balance. Office supplies have a $500 debit balance. Okay, these are ending balance, right? So owner capital has a ending credit balance of $50,000. Owner withdrawals has a ending debit balance of $1,000. Rent expense has a ending debit balance of $2,000. Salaries expense, same thing, ending debit balance of $2,000. Utilities expense, ending debit balance of $300. Service revenue has an ending credit balance of $110,000. Okay. Now we go back up here to cash, and we got to do the math here. Okay. Since I'm recording this, I'm not going to do this by my head. I'm not going to do that. So 20 plus 50 plus 60, that gives you 130 minus 2 okay, minus 2 minus 500 minus 2 minus 300 minus 1,000. Okay, so cash has an ending debit balance of $124,200. Okay, and this is because the debit column, the amount in the debit column is greater than the amount in the credit column. So Cash has an ending debit balance of $124,200. And that's great because normally that's what the balance should be. It should be a normal debit balance because it is an asset. Okay. So let me zoom out. I know it's going to look very small on the screen for you all. But yeah, just take a look at the general journal. Okay, scroll back up here slowly, the general journal. And take a look at the T accounts. Because everything that you see here from the general journal was just transferred over into the T account. And the T account shows you that each account is by itself, is isolated from each other. Okay, so cash is its own account, equipment, office supplies, owner capital, and the other accounts. They're all separate from each other. And it just shows the effects of the balances in these accounts given the transaction that occurred. Okay, so it's just demonstrating that summary. Summarizing these accounts. What actually is the ending balance from doing these transactions for each account? So in the next video, I'm going to go over the trial balance. How does it work and what is it used for?